Now that we've completed our job cost records for Marge's sofas, we can start recording our entries for the period. And if we're going to use materials in production for our books to work, we have to first put those materials on the books so we can eventually take them out of raw materials and put them into our jobs that are work in process. On January 1st, Marge's sofas purchased $29,000 worth of raw materials, and they did so on account. $24,000 of these materials are direct, while the remainder is indirect. We need to record the journal entry to recognize this purchase, and for Marge's, they are going to use separate subsidiary accounts for direct materials and indirect materials. So on January 1st, on 1/1, I'm going to record this purchase by making two debits to raw materials inventory. I'm going to separate the portion of these raw materials that are direct materials into its own subsidiary account called Raw Materials Inventory Direct. And I'm going to do that for the amount of direct materials purchased, which was $24,000. And then I'm going to put the amount of raw materials inventory that is indirect into its other subsidiary account. And it says the remainder of this purchase was indirect materials. Well, we spent $29,000 on materials. We know $24,000 of those were direct, and the remainder was indirect, so the indirect portion had to be the remaining $5,000. And then lastly, this is on account, so to account for this purchase, we're going to put it into accounts payable. And that is going to be for whatever makes our debits equal our credits, in this case the total amount of the purchase, which is that $29,000. And here we purchased raw materials on account. We need to start moving those materials around on our books so we can put them into our jobs as we're working on them. Maybe we finish those jobs, put them in finished goods inventory. Maybe if we sold those jobs, get that cost into cost of goods sold. And the first step is to take it out of raw materials and get it into WIP. So on January 31st, that's exactly what we're going to do. We're going to record the journal entry to account for raw materials which got requisitioned to jobs during January using a separate subsidiary account for each individual job. So we're not just going to have WIP inventory, we're going to have WIP inventory for jobs 1, 2, and 3. In addition to these direct materials which were requisitioned, $5,000 worth of indirect materials were used across all jobs. Well, let's worry about the direct materials first. When we put costs into jobs for materials, we got to take it out of our raw materials accounts. Since all material accounts are asset accounts, they increase or costs go in on the debit side, and they decrease or costs go out on the credit side, which means here we need to have a debit to each of our WIP inventory subsidiary accounts for each job to account for the amount of materials that we took out of raw materials and put in to these work in process jobs. So we got a debit to WIP inventory job 1, a debit to WIP inventory job 2, and a debit to WIP inventory job number 3. For how much? For how much material we put into the jobs. How am I going to figure that out? That's what the job cost records are for. So it tells us over here that we put $3,500 worth of materials in to job 1. So in our journal entries, we should be putting that $3,500 worth of materials into our WIP inventory job 1 subsidiary account. For job number 2, we go and we find the total cost of materials that were requisitioned for use in job 2, and that totals up to $4,000 right here. So we're going to debit WIP inventory job 2 for that $4,000. And then lastly, in job 3, our job cost record says we use $1,000 worth of materials in that job. So let's put that $1,000 worth of costs into job 3 on our books by debiting WIP inventory job number 3 for the $1,000 worth of materials that we had on job 3's job cost record. That accounts for all of the direct materials. Well, our information tells us that we also used $5,000 worth of indirect materials across all jobs. They can't be traced easily to all jobs. If we're making sofas, that would be things like, upholstery, staples, glue, etc. Things we would not want to have to track individually how much we use to each and every job. Instead, we're going to put it into that pool, which keeps track of all of our indirect costs, manufacturing overhead. So let's put that $5,000 of indirect materials in to our manufacturing overhead pool. What's it coming out of? It's coming out of our raw materials accounts. So let's have a credit to raw materials inventory, reducing the value of this asset account. This one is raw materials inventory direct for the amount of direct materials that got used across all three of our jobs. So if we had 3,500 used in job 1, 4,000 used in job 2, and 1,000 used in job 3, that means a total of $8,500 worth of direct materials came out of raw materials inventory and were put into those three respective jobs. What about manufacturing overhead here, this $5,000? Well, that was indirect materials. So we have a raw materials inventory indirect subsidiary account. The cost went in there when we purchased, but we used them in jobs, so now they got to come out. So we're going to decrease the value of that asset account by crediting raw materials inventory indirect for that same $5,000. And we assigned material costs to jobs. Our next journal entry is for our second cost component, which is our labor costs. We need to record the journal entry to account for the labor costs of jobs that occurred during this month of January. We're going to use a separate subsidiary account for each job, just like we did up above. In addition to all of the direct labor costs that we can steal off our job cost record, we're going to have to put $3,750 into manufacturing overhead for the indirect labor costs that we occurred during the period. We're going to assume that all of our labor costs have been paid in the form of cash. So on 131, just like we had above, we're going to need a debit to WIP inventory job 1, 2, and 3. I'm going to hit equals. I'm going to click on WIP inventory job 1 from the entry prior, hit enter to bring that down, and then I can use the fill handle by going to the bottom right corner, waiting until my cursor turns black, and dragging down, and it's going to drag down those other three. And hell, I want manufacturing overhead as well. There we go. We're going to have a debit to all these accounts equal to the cost that was put into those accounts, or the cost of indirect labor, which needs to be put in the manufacturing overhead pool. So how much labor cost was incurred from job number 1? Let's go back and check job 1's job cost record. $4,500. $4,500 worth of labor costs went in to job 1 while it was a work in process. So let's take that $4,500 worth of labor costs and put it into job 1's subsidiary account in our journal entries. Back to our job cost records, we see that $6,000 worth of labor costs were recorded for job number 2 while it was a work in process. Let's put that $6,000 into job 2's WIP account in our journal entries. And then lastly, job number 3 had $1,000 worth of labor assigned to it in its job cost record. Let's put that $1,000 in to job number 3's WIP account in our journal entry. That's $1,000. And then lastly, our information tells us we had $3,750 of indirect labor costs during the period. Since that's indirect and not direct, we don't put it right into a WIP account. We first put it into the manufacturing overhead pool. So we're going to debit manufacturing overhead for $3,750. All of these wages were paid in the form of cash, which means we sent out an amount of cash to our employees equal to the sum, equals sum, open parenthesis, of the amount of direct labor for job 1 plus the amount of direct labor for job 2, the amount of direct labor for job 3, and the total amount of indirect labor costs we incurred across all of those jobs. So equals the sum, highlight the 4 numbers that you want to add up, close your parenthesis, and hit enter. And that totals up to $15,250. We assigned labor costs to jobs. Next, on January 31st, we need to account for the amount of money we took out of this manufacturing overhead pool and put it into jobs. Well, if we're putting it into our respective jobs, we are going to have to put it in to their WIP accounts. So on January 31st, I'm going to once again have debits to our 3 WIP accounts, WIP inventory for job 1, 2, and 3. So let's get those accounts going in here in debits. There we go. We got our 3 debits. What's the cost coming out of? The cost is coming out of our manufacturing overhead pool because we're allocating that pool of overhead out of our pool and into the job. So Cost went into the pool on the debit side. What's going to happen to the account when we need to take costs out of the pool? We got credit. So we're going to have a credit to manufacturing overhead. For how much? That's one more time what our job cost records are for. So let's go back to our job cost records and see how much manufacturing overhead was assigned to each of these respective jobs. Job number 1 had $7,000 worth of overhead assigned to it. So let's go and put $7,000 worth of cost into job 1's WIP account. Job number 2, back on our job cost record tab, had $8,000 worth of manufacturing overhead assigned to it. So let's debit WIP inventory dash job 2 for that $8,000. And lastly, job number 3 had $2,000 worth of manufacturing overhead assigned to it. Let's take that $2,000, put it in to job 3's WIP account. And all of these costs are coming out of our manufacturing overhead pool. So how much in total was taken out of the pool and assigned to jobs? Well, it's equal to the sum of the $7,000 we had for WIP inventory job 1, $8,000 for WIP inventory job 2, and $2,000 for WIP inventory job 3. We total that up, and that is equal to $17,000. We allocated manufacturing overhead, or MOH if you want to shorten it, to jobs. Well, as you're putting costs into jobs as you're working on them, the value, the WIP account for those jobs while they're a work in process, it just keeps going up and up as you add material costs and labor costs and overhead costs. But when you finish the job, it's no longer a work in process, which means you need to take that value out of your WIP inventory account and put it into finished goods. That's exactly what's happening in our next journal entry. We completed jobs 1 and 2 during the month. Job number 3, however, is still a work in process. So we can leave all of the costs of job 3 in the WIP inventory job 3 account because it's still a work in process. However, we can't have any value in WIP inventory for job 1 and job 2 because those accounts are no longer being worked on. They are finished goods. So what are we going to do? Well, firstly, do we use subsidiary accounts for finished goods? Our information tells us that we do not separate our subsidiary accounts for finished goods. All inventory accounts are assets. They go up on the debit side. The amount of finished goods that we have on our books has to be going up because we finish more jobs. So we're going to debit finished goods inventory. All inventory accounts are assets, which means they decrease on the credit side. We need to decrease the value that we have for WIP inventory job number 1 and 2 because there shouldn't be any cost in that. They're no longer a work in process. So we're going to have 1 credit to each of the jobs that we finished, respective WIP account. Credit to WIP inventory job 1 and a credit to WIP inventory job number 2. How much cost has to go out of those WIP accounts and into finished goods? Whatever the cost of the job was. One more time, back to our job cost records. How much did job 1 cost us in total? Job 1 cost us $3,500 in materials, $4,500 in labor, and $7,000 in manufacturing overhead for a total of $15,000. So we need to take that $15,000 out of the WIP account. We already put it in on the last 3 entries. We're going to take it out and put it into finished goods. So the amount that is taken out of that job is whatever its total cost was according to its job cost record when you finished it. Let's take that $15,000 out of WIP inventory job number 1 by crediting WIP inventory job 1's account for $15,000. We finished job 2 as well, so the same thing. We're going to go to job 2 and we're going to find the total cost of job 2. The total cost of job 2 was $18,000. Since it's finished, it can't be in WIP anymore. We're going to take it out of WIP for whatever its total cost was, and that was $18,000. So if we moved $15,000 worth of costs out of WIP inventory when we completed job 1, and we moved $18,000 worth of costs out of WIP inventory when we completed job 2, we are moving a total of, add those two together, equals $15,000 plus $18,000, $33,000 worth of costs from our WIP accounts to finished goods when we completed jobs during the period.